Hi, as the saying goes, that market is a slave of a corporate earning. It is very important to review the corporate earnings and also forecast the growth of the future corporate earnings. If I talk about Q1 financial year 2026, the growth of a corporate earnings is not very inspiring and is in a lackluster. The growth of the major companies are low single digit and maximum are into negative. But now stage for a stronger corporate earnings is need to be set. In fact, in this period of quarter one, there's lot of economic transformation which has happened into the Indian economy. These strategic transformation has happened, but their benefits is yet to be delivered to the Indian economy. What are these strategic transformation? Transformation 1 is RBI rate cut catalyst. RBI monetary policy has played a crucial role in supporting the Indian economy. They have already cut an interest rate by 100 basis points by June 2025. This reduced interest rate will help corporates to reduce their cost, which will add up into the earnings of the corporates. Also, the corporates who are borrowing money for their corporate expansion will also borrow at a lower price. That will help economy to drive the growth. Transformation 2 is a reduced input cost. The raw material cost has been reduced by 14%. This reduced cost add into the profitability of the companies because money saved is money earned, and this saved money helped into grow the business. Transformation 3 is a stimulus provided by the government to boost the manufacturing sector in form of the capital expenditure. The state level capital expenditure is expected to rise by 30% year on year. So in Q1, 95,000 crore rupees of an investment has happened into the manufacturing sector. Plus, there is a PLI schemes which is gaining momentum. And this combined expenditure is also creating a good job to the Indian economy. Transformation 4 is a comprehensive overhaul into goods and services taxes, which has recently happened into the Indian economy by the government. The government has reduced the taxes on the various categories except the sin goods, which is like tobacco, pan masala. The reduced tax will reduce the price of the product, which will increase the demand of small cars, automobiles, electronic goods, retail, insurance. This will boost the economy and also provide a momentum to mid and small cap segment, especially to the consumption driven stocks. Transformation 5, which has happened to the Indian economy, is that the Indian economic credit worthiness has gone better. S&P sovereign rating of Indian economy has improved from BBB minus to BBB stable. This will reduce the cost of borrowing of the Indian government or also the companies which are trading into the international market. The better rating will also boost the confidence of FIIs and FDIs to make investment into the Indian economy. So these 5 transformation will help the corporate earnings to increase in the coming quarters, and so the stock market is also expected to do good. Therefore, dear investor who are already invested into the stock market and planning to make investment into the stock market, I would suggest to stay invested and make investment for the time horizon of more than 5 years. Thank you.